Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. The US is pushing the EU and China together with its capricious trade and tariff activity. But firstly, American spending regained momentum in March while their incomes continued to grow, a sign consumers could drive better economic growth this year. But that will depend on a rise in incomes, which hasn't reflected yet in this data, although it is expected to show up soon. Income growth has been relatively smooth over the past year, while expenditure data has been more changeable. The data out today also shows inflation hitting 2% in the US, up from 1.7% in February. That is a 17-month high. The US Fed will be reassured by this data. In Canada's west, the real estate market there is mirroring New Zealand. Vancouver is coming off the boil, but only to be replaced by resort town Whistler. This situation is much like the Auckland and Queenstown situation. And the Mexican economy is growing at a rate that is a little faster in the first quarter of 2017, and it's expanding faster than late 2016 as industrial production recovered and their service sector grew faster. The result beat expectations. And China's official PMI readings, based on a survey of about 3,000 large, mainly state-owned enterprises, showed little change. The factory measure was down slightly, probably a result of the trade spat with the US. The services sector was up marginally. The expansion levels in this survey are quite moderate. And as it is typical for official Chinese statistics, the results don't stray much month to month or from the official narrative. And German retail sales unexpectedly fell in March, marking a fourth consecutive drop and dampening cheer around the consumer-led upswing in Europe's biggest economy. German inflation came in unchanged at 1.6%. And the EU is preparing to respond to the unilateral American decision to impose tariffs on steel and aluminium products, which come into effect at about 5 p.m. today. That's 5 p.m. New Zealand time. China and the EU are lining up against American trade policies. US Treasury 10-year yield is now at 2.95%, down 1 basis point. The Chinese 10-year yield is at 3.65%, unchanged, while the New Zealand equivalent is 2.89%, down 2 basis points. And gold is at $1,318 an ounce in New York today. That's down $5. Oil prices, however, are a little higher today at just over $68.50 a barrel, while the Brent benchmark is just over $75 a barrel. The fast fall in the availability of crude oil from Venezuela is affecting market supplies. And the Kiwi dollar is starting today down at 70.4 US cents. On the cross rates, we're now at 93.4 Aussie cents and 58.3 euro cents. That puts the TWI at 72.6, and that's its lowest in 5 months. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.